we are celebrating the 250th anniversary of Beethoven's birthday. So I'm going to perform Beethoven.
Wonderful.
All right? The first movement of the great pathetic sonata for piano.
Wonderful. Álvaro, I'm speechless.
No, my pleasure, my pleasure.
Thank you so much. For those joining us now, this is Álvaro Siviero, who's been playing piano since his childhood. Álvaro has been actively participating in the Brazilian music scene as a soloist and chamber musician. He's played all over the world and is joining us here now, helping us to open the second event within the BayBrazil annual conference. Álvaro, thank you so much. It's an honor to have you here. And I want to ask you, why did you choose Beethoven?
Yeah,
Today?
First of all, it's all the way around. I thank you for having me, all right? And I chose Beethoven because, as I said at the very beginning, this year we are celebrating the 250th anniversary of Beethoven's birthday. So this was supposed to be a celebration all over the world, but because of the pandemic, you know, the coronavirus, things got so affected. But I hope from the bottom of my heart that this small recital may contribute to place together with fame, power, money, success, to place together other things such as values, transcendental goals. I think we are living in a world that is getting stressed and crazy and emptier every single day. And it's our duty to change it, to transform it. So,
well, you are certainly doing that. You are certainly changing and transforming and inspire us with your music. Muito obrigada. Muito obrigada, not only for being here today, Álvaro, but for being a champion of this amazing music to the world, not only to Brazil. I know you've been all over the world playing. Thank you.
It's my pleasure being here. Thank you for having me.
Thank you, Álvaro. Obrigada.
Obrigada.
And for those joining us now, again, this is the second event within our annual conference. This year marks the 10th anniversary of BayBrazil. So to celebrate that, we are expanding our annual conference into a 3-month program focusing on a variety of topics. Today, we are, well, last week actually, we had investors discussing US and Brazil innovation economies. Today, we invited some experts to help us understand the real estate market. We will discuss how technology is transforming real estate. Our group of speakers will explain to us the main differences between the US and emerging markets in Latin, in the real estate market, and the pre and post COVID and the impact in the sector. I want to start by introducing our guest, moderator, Brian Ricard. Do you have Brian's video? Yes, here you are.
Hello.
Brian, thank you so much for helping us and put together this event. I know the real estate, as many other sectors, have been highly impacted with the current situation. But before we get to the current situation, I know you prepared a recap of what's going on, what happened, the innovations that happened in this past 10 years. So thank you for being here. And for those who don't know Brian, I just want to say a few words. He is a gringo who lived in Brazil for a few years and now is back. He is joining us. Are you in Santa Rosa?
I am. I'm up in Sonoma County in Bennett Valley, yes.
Yes. So after a few years, how many years did you live in Brazil, Brian?
6 anos e meio, 6.5 years. Yeah.
Okay, and now Brian is back. So he is he co-founded Viva Real and was the company's CEO from 2009 to 2016. when he became chairman. The company raised over $74 million under his management. The team scaled to over 500 people. Brian led merger negotiations with Zap Imóveis, and now he is the chairman of Grupo Zap, and he's also an angel investor. Okay, Brian?
Thank you.
It's going to be a wonderful conversation, and let's just get started.
Well, thank you for having me back. This is my second time participating, and it was a great first time that I had a chat. And I'd like to start off by saying that this is the classiest webinar I've ever participated in with that opening. So thank you, Alvaro, and it's a pleasure. So let me share my screen with you. I'm going to go through a few slides just to give everyone a bit of an overview of kind of the real estate market, what we've seen. Let's see here. I'm going to pull it up. If everyone can see it, please let me know. Can you see it? Wonderful. So we're going to talk a little bit about the future of real estate. Briefly, as Marguerite mentioned, I've been an active investor in, as an angel investor in 15 prop tech companies. So I believe it's early days here in prop tech, and I'm very bullish on the future. We're going to talk a little bit more about where we've come over the last 10 years. So this is a bit of the agenda we have today. We're going to talk with Hernan from Kaszek, who's an investor also in BayBrazil and someone I've worked with for almost 10 years. We'll have a few Q&A questions from people, and then we'll dive into a little bit more about the U.S.-Brazil real estate landscape in a conversation with Jonathan Mcnulty, CEO of Haus, and also Mate Pence from Loft. So yeah, looking forward to this chat, and I'm just going to go ahead and dive right in. Real estate is a very large sector when you think of real estate and prop tech, and you can look at commercial, industrial, residential, and there's so many different segments to real estate. But today we're actually going to just talk more about residential as it pertains to this conversation. So I like to break residential into 5 categories: short-term rentals, long-term rentals, tech-enabled, iBuyer, and property portals. And so that's just as a quick overview to set the landscape. Now, if we think about what has changed over the last decade, I would say the primary evolution that we've seen is that real estate is becoming more unbundled and new entrants focus on the transaction. So in 2010, kind of around the time that we were starting, there was a handful of incumbents, and we were focusing on digitalizing all of the properties into one kind of central marketplace. What we're seeing in the last couple of years, and I believe is something that where the future is headed, is deeper verticalization of the process. So you've got more specialized focus, in residential. It could be sales, it could be commercial, financing, and so we're seeing a deeper kind of full stack approach that amongst the startups. An example of this is Quinto Andar, where Hernan is an investor, and they've digitalized a lot of the the long-term rental market and kind of change the experience. We're also going to be speaking with Mate as well, who has focused more on the sale through the iBuyer model, which we'll explore as well. So one thing that we know won't change is real estate has continued to be a huge asset class. It's the largest in the world, and we're talking about hundreds of trillions of dollars of assets, yet it's terribly illiquid. And so this is one thing that we all, I think everyone would agree upon, is that no one says, oh, I had an amazing real estate transaction. And so, that's something that we're going to evaluate and look at more in terms of how to get to a better transaction, how to get to, a more kind of fluid process. But as a little data point that I wanted to bring to everyone's attention is that there's been more billion-dollar companies in real estate tech in the last 15 years than almost any other consumer service category, behind e-commerce. So this is, it's a very large category, and it's still very early in its cycle. Speaking of cycle, and if we look at the evolution over the last 20 years, we look at this graph, the first graph you see in the middle of the page, kind of to the left. That graph illustrates how many companies have been founded in prop tech. And so you can see it's grown dramatically kind of over the last couple of decades. And it really hit a peak there in 2014, 2015 in terms of volume of companies being founded. But what I found really interesting when I dug into the data is that despite it kind of the curve going down and there's less companies, the amount of capital and funding that has gone into these companies has skyrocketed. So what that means is that tells us there's a higher concentration of capital going into those companies. And we're seeing more mature companies, that implies probably more consolidation into these companies. And it's just a maturity in the ecosystem. So more post-Series A rounds, more, M&A activity. And if we think about kind of where things are headed, we're going to explore a few different topics, and I'll outline a couple things that I think about. But when we look at the global pressures of COVID's impact, the climate change, sustained urbanization, there's a lot of Internet of Things, machine learning, artificial intelligence, blockchain. These are all things that are very nascent and early in the life cycle of real estate. But without a doubt, there's going to be some transformations that happen through these emerging technologies. So despite a lot of capital going in, I thought it was relevant for everyone here to look at just proportionately, if we look geographically around the world, Brazil, we've seen a lot of activity in PropTech over the last couple of years. And we've got a few guests here that are going to be talking more about that. But if it pales in comparison, if you think of the US and the size of, the investment that have gone into the US and number of companies, Europe and Asia. So it's still quite a disproportionate amount of capital and companies being formed attacking the property space. So I think that there's a huge opportunity still. And then, I like to think about kind of what this future looks like. And, we've been experiencing this kind of, we started out in this information revolution, just in Brazil, just getting the properties digitalized and, being able to search online was kind of the last decade. And we've entered into this kind of transaction revolution. And so I brought a quote here from Pete Flint, who was an advisor to me at Viva Real. And, he founded Trulia, which sold to Zillow, who now is a leading prop tech globally. And what I liked about what he said is that the way the consumers perceive the role of capital providers, in this case, mortgages and brokers, it will increasingly blur. And we expect a series of successful, distinct brands with differentiated products offering servicing variety of segments in the market. So what's interesting about that is, there's this evolution in terms of the roles of, the different players. And, the question mark is, how is COVID going to accelerate that? And that's something we'll also talk about today with some of our guests. I also brought these graphs that I think are highly relevant. Mate is in the iBuyer space. And so I dug up some data on, on the iBuyer volume of transactions. And you can see, for those that aren't familiar, iBuyer is essentially you as a homeowner selling to a company instead of selling through a typical agent or broker from a, person to person. And so what's interesting about this data here is that it's grown incredibly fast over the last couple of years, but it's still a very small percentage of the transactions. This graph here only comprises of 0.5% of all transactions in this format, in the iBuyer format. So the question will be, what is that going to look like in the future as well? I also brought in a few different kind of topics here that, I think are things that I'm thinking about, the financing piece. And we're going to talk to Jonathan at Haus and get his perspective more. I think he's got an extremely innovative model that he's brought. We can see if there's some applicable things to Brazil. I mentioned Creditas, which is a company in Brazil that's doing, some home equity lending, and also now getting more into the, the real estate transaction as well. You've got co-living, alternative living, the evolution of that. And then, of course, increased verticalization, which is a really core part of what we're seeing. But there's, a handful of other things that, we'll have to keep an eye on and looking at kind of data and how data plays. I've got some questions for our panelists around data, because that's obviously a very critical part of real estate. And so what is the future of data like? And then, home builders and tech-enabled construction is something also that's quite interesting. And lastly, we're not going to dive into commercial real estate, but I've been wondering if there's a WeWork 2.0 in there or something that's going to evolve I've seen very low amount of venture go into commercial real estate, and seeing the evolution of how things are working with COVID and what the impact of that is on commercial. It'll be interesting to stand by and see what business models address that segment as well. So this is just a quick overview, and I'm gonna just mentioning it's hard not to talk about COVID in these times, because they are very relevant and they're impacting the economy. They're impacting, unemployment is rising. We're seeing interest rates, at historic lows, and government stimulus. The CELIC, has dropped significantly, and the results of that is likely cheaper mortgages. And is that going to boost financing? How is that going to impact the rental and the home buying businesses? So these are all things that we can explore in this conversation. And so, with that, I think it would be great if we could, that's my introduction here to this, but I'd love to bring on Hernan Kaszek. So Hernan, are you on? Can you bring your video up, please?
I am, Brian. I think I cannot control my video, but yeah.
Oh, yes, because the video is on your presentation, Brian.
Okay, let me stop sharing then. Here we go. There we go.
Hey, Brian.
Okay.
No, I still cannot turn on my video. It says that someone needs to do it.
Maybe someone at BayBrazil needs to activate that. Well, while we're figuring that out, let me share a story a little about Hernan real quick. So Hernan, I met Hernan. Well, first of all, Hernan, great to have you. Thank you for joining us.
My pleasure, Brian. Thank you for having me.
So Hernan, I remember the first time that actually I spoke to you. It was a Friday night. I was in the office late in São Paulo, and I pitched you over the phone. And several years later, when I was starting out, I didn't have much of a network early on at BayBrazil, and so I was building my board, and one of my angel investors, Greg Waldorf, who I think that you may know, he asked me, "Who do you want to bring on the board, of our company?" And it was at that time, I'd suggested like a friend of mine who I considered a smart guy, but he'd never built a tech company in Latin America. And so he encouraged me. He said, "Hey, Brian, why don't you think a little bit bigger?" And so I blurted out, I'm like, "Well, one of the founders of Mercado Libre." And it seemed like a long shot at the time because we didn't really have anything. And this was about 10 years ago. And so I've publicly stated that, I'd read the Mercado Libre case study at Stanford, but I never shared with you how I came across that. And so one last quick story here before we dive in. When I was starting out, I was in Colombia, and I was trying to sell e-commerce websites to companies, these little shops, these computer shops. And it was crazy because everyone that I went to go try to sell my services to, they said, "I don't really need you. I've got Mercado Libre." And then I went to, I went back and I found an internet cafe, and I said, "Who is this Mercado Libre, and why is everyone using them?" And so full circle, here we are 15 years later.
Great to be here, Brian. I have to admit that I don't remember that very first contact that you're mentioning, but I do remember very well the second one. It's one of those things that you know exactly where you were.
Sure.
And for some weird reason, I was in the parking lot of a supermarket near my house. And somehow, I don't know why you called out of the blue, or maybe, I don't know, I had to rush into the supermarket, whatever, and I was there talking to you. And I remember that was the beginning of what ended up being our investment in BayBrazil. So
wonderful.
Great that it went like
great.
that.
Wonderful. Well, listen, let's get started here, and just diving in. I think we can start a little bit more generally, around kind of investing, and then we can dive into a bit more about real estate, which both of us have co-invested in a handful of real estate prop tech companies together. So, I've heard you say recently that this current COVID situation, you're more focused on your existing portfolio. Has this changed at all?
Yeah, so let me briefly correct that.
Sure.
I think what that was, obviously, we were starting 2020. All companies had their plans for the year. Yep. Those plans have been agreed on recently, and suddenly the world stopped. So we really had to go back to square one and work with all companies to redo their plans. And by the way, that had to be done a few times, right? Because initially we didn't know what was coming. Then we got hit. Then we realized that we got hit, but maybe in some cases things were accelerating. In some other cases, things were not as bad as we initially thought. In some other cases, they were really bad. So we really had to make lots of adjustments. And in our industry, in the venture capital industry, you typically wear two hats, and it's roughly 50-50. So 50% is working with the portfolio, and 50% is looking for new opportunities for your new portfolios. And during the first weeks of the COVID crisis, we were so busy with the portfolio part of our responsibility that we couldn't look into pipeline. As things started to accommodate and a little bit companies were finding their ways and we established those new plans, we continue to be more active than usual because, again, as you were saying, we cannot ignore the current context we're living in, but I think somehow accommodated, we started spending back more time on pipeline. And I wouldn't dare to say that now it's 50-50, but it's probably, I don't know, 70-30 or 60-40. And it's not 100% portfolio as it was at the beginning.
Got it. And now, Hernan, besides your investment in BayBrazil, I mentioned we've been co-investors in companies like Quinto Andar and La Haus, not to be confused with House from Jonathan Mcnulty, who's going to be speaking shortly. This is the Colombian company. What is the most significant change that you've seen in the space in the last decade?
So I think you mentioned a few things in your presentation. So on the one hand, a huge asset class that on the one hand is the largest, on the other hand is probably the less sophisticated one. So there's lots of opportunities to start being more intelligent around that asset class. And I think that technology is what will somehow bridge that gap between size and expertise around that asset class. So that is one. And then what we've seen is the evolution of technology. So you know this very well. BayBrazil was initially focused on connecting buyers and sellers, making that in a much more efficient manner, cheaper for buyers to look for houses more efficiently, cheaper for sellers to post their houses there or their apartments there. But then, as you also mentioned in the introduction, you have to start getting more vertical. So BayBrazil or Grupo SAP now remains kind of the largest by far in terms of traffic. And that is what you have somehow dominated in the market. But then you have companies like Quinto Andar that say, okay, you know what? There's also a huge issue around renting, long-term rentals. And that issue is not only because of findability or because of the things that BayBrazil solved, but also because you need a guarantee to rent an apartment. So let's go and offer a financial product to solve that. So, or there's something around management of that property. If you're the owner, you want someone to help you there in the relationship with the person that is renting the apartment. So you need a verticalization there, and Quinto Andar has done a good job. At the other extreme, you mentioned La Haus. And La Haus is trying to really walk the buyer and the seller throughout the transaction. So it's not only connecting them, that is something that, again, BayBrazil or Grupo SAP have done really well, but also helping them understand that they're buying the right house through the right process, at the right valuation, etc. So I think that there are tremendous opportunities to continue verticalizing the market. Some of that is what has happened over the last 10 years, but I think there's much more to come.
And so how would you describe your thesis then as it pertains to prop tech?
We think that as with
Will you continue investing?
sector,
Will you continue investing? I mean, you've made a handful of investments. Is this a winner takes all? Are you going to be, dabbling in different areas? Condominium? How do you see the whole space?
But I think it's the typical evolution that we've seen in many other industries. Like initially, you look at, I don't know, e-commerce and one company let's say Amazon, to speak about a company that's outside of the region, or mainly outside of the region, it's a company that with a horizontal approach creates a better alternative versus what you had before. But then you start having companies that are solving particular categories better. So I don't know, in the pet supply space, you have a company that is doing a better job than Amazon, or maybe, I don't know, in home products, you have a Wayfair that is offering also a better experience than Amazon. And by the way, you have the Amazon halo, but then you start having companies around payments that offer something. Without online payments, you cannot resolve that. And even within payments, maybe you initially have like a PayPal, and then suddenly you have a Stripe. So what's happening, I think, in a way, is those ecosystems begin with 1, 2, 3 big players that start offering the first kind of version of a solution. And suddenly, because of those players, plus because of demand, etc., those ecosystems start to grow, and you start having new spaces. Some of those are indirectly captured by the large initial players, but most are really open for new companies to emerge. And that is exactly what's happening in real estate. I think in real estate, you had first this horizontal approach of let's facilitate the connection between buyers and sellers. And I think that was quite well solved by platforms like Grupos App or by others. But then you need, okay, by the way, this is better, but there's a gigantic opportunity around financing. So let's bring a Credita that you mentioned. And then there's also an opportunity around closing the transaction. And then you come up with La Houses, or as you were saying earlier, within this gigantic umbrella, then rental could be there, but doesn't really fit because there are some particular friction points that are more focused on renting that are not present in buying or selling. So you start kind of creating solutions for that. So I think that we're at the beginning of a long way of new companies entering the space and offering new solutions. It's not that they will take over what others have done well, but I think new opportunities will emerge and new complementary business or services will appear.
And how do you manage that as an investor? Because, you know, you've got a handful of investments going, you've got, you know, Quinto playing over here, then they might get into sales, and you've got Creditas that's thinking about sales. And so how do you remain having, you know, when you've got a conflict of interest around your investments, and how do you guys manage that internally at Kaszek? I mean, I think you guys did a decent job from what I've seen, but tell me more about how you guys think about that and what the dialogue is internally.
No, it's a great question. And I think somehow you've been very close to it because you were the CEO and founder of one of our important investments in the sector. And you saw us participate in other companies in the sector. And by the way, you were also an investor in many of those companies. And actually, I think that you were the one that directed us to Quinto Andar. So thanks for that.
You're welcome.
So clear, but the thing is, what we want to avoid always is clash-on competition from the get-go.
Yeah.
Because obviously, the kind of work that we do with companies is about building trust. It's about building a long-term relationship with the entrepreneur. And you cannot build that if the entrepreneur feels that he or she is going to tell you something and you're going to use that against his or her company because you're going to tell their competitor what you're doing. So we're very sensitive to that. So we never ever invest in companies that at the beginning are clashing.
Yep.
But then, you know, this sector is very, very dynamic. So eventually, I don't know, BayBrazil starts with buying and selling, and Quinto Andar starts with renting, and one of them moves into the territory of the other, and you start having some conflict. So that might happen. It's a very dynamic market, or you can have a company doing what BayBrazil was doing in another market, and then they decide to enter Brazil and they start conflicting and competing with you. So that's something that we have to live with. So far, we haven't had significant clashes. So maybe at the margin, one company is competing with the other, etc. So we've managed that well, but we are sensitive to it. And if eventually we come to a situation where we really have a conflicting point, we're going to excuse ourselves from one of the boards of the company and just be a passive investor there. Well, what it's interesting to say also, and you will understand this, is that you have to ask the entrepreneurs how they feel about it, but never ask for permission, because all entrepreneurs are so paranoid that they will always tell you that all companies that are out there are their main competitors. So
Yeah, they also have a grandiose idea of how big their business can be, right? And where is, that's why you invest, right? Because they have this big vision of how, how big their business can become. So
no, and we love that they are paranoid. That's great.
Yeah.
That's a significant part of being a successful entrepreneur.
Yeah, only, as Andy Grove said, only the paranoid survive. So as he said, so no, that's great. I think that makes a lot of sense. And it's inevitable that you'll have more overlap over time, just because as your portfolio gets bigger, there's more entrepreneurs, companies are expanding into different tangential spaces. It's something that will happen over time regardless. One thing I know about, I'm pretty close to you guys and had a lot of conversations over the years. And I know that Kaszek likes to invest in businesses that have a local competitive advantage, right? That's something you guys talk about internally. And, you don't like investing in some productivity tool where, a team in Romania could be competing. It's something that has an inherently local for LATAM. You can't get any more local than real estate, right? Like by definition, it's local. So, since the real estate ecosystem it's quite early in its cycle, I'm curious to see, how you think about, I haven't seen anything in like the portfolio in commercial, for example. How do you, how are you thinking about, different sectors? So far you've been in residential. Why haven't we seen more commercial real estate opportunities? And, given the backdrop of COVID situation, is it counterintuitive to think that maybe, there's a great opportunity in commercial right now because of, how things have changed? So what are your thoughts on that?
Sure. So let me first address the reason why we focus more on local businesses versus global business being built out of Latin America. And there are two big reasons. One is we feel that we know quite well what's going on within Latin America. So if you come to us and say, hey, I have this business in real estate for Latin America, we can very quickly see who else is out there, who might eventually be your competition. We might be quite confident that if we like your business and we like you as a founder, that we're making that decision, somehow having good clarity about what's going on in the whole market. And it's not that we end up investing in a company and the following day we learn that there was someone much more advanced with much better technology, with a stronger team, etc. So within Latin America, we feel that we control somehow the market. If you talk about the world, we don't know that. So as you were saying, we don't know if someone in Romania is starting something with a better team, and just because we're not so close to that market, we're not aware of it. And the other thing is where you can help companies, and we feel quite confident that we can really help companies work, expand, hire, structure their technology, etc., throughout Latin America. Maybe we're not that great at doing that in the rest of the world. So obviously we're all relatively experienced professionals, so we can give you a good feedback here, a good recommendation there, but we don't have the kind of grasp that we have of the Latin American market. That's why we feel that within that market, we can really make a decision, we can really make a difference, and we try to build our business from that advantage that we feel we have there. Then in terms of commercial real estate, Brian, I think as you also said at the beginning, we are going to see some disruption there. It's hard to know when. The way we invest is not so much about trying to think how the future will look like. We try to stay close to entrepreneurs like you and see what they are doing, what they are thinking. And we're more founders driven in that process of finding the next great opportunity than imagining how the future will look like and try to place bets based on that future idea of how things will work. But I'm sure that there'll be lots of opportunities. You mentioned in the office space before COVID, there were some transformations already happening. I think that now everything will accelerate. I don't know exactly what will end up happening. But the day I was talking with our friends from Mercado Libre, and they were telling me that now they're going to increase significantly, probably forever, the home office flexibility that they were already pushing, but not so much. I think that also in e-commerce, we feel that the winning model is the hybrid model. So you're going to have companies that are going to have a very strong presence online, but at the same time, they will have some connectivity with the offline. So there'll be an opportunity there, but maybe those offline stores are not the kind of offline stores we were used to. There might be some adaptation. They might be more technical in a way, more technological oriented. So let's see what happens. I'm sure there'll be lots of opportunity, and also in terms of hotels, in terms of buildings that are prepared for students close to university. I think that we're going to get into a new phase within real estate. I don't know exactly when that will happen, but the whole trend around technology is of making assets more efficient. There's been lots of discussion around car ownership, right?
Yeah.
And during a long time, that was also a significant asset that people had. And now many are saying, hey, you know what? I don't want a car, or instead of two, I want just one. And like the Lyft and the Ubers and convenient ways to rent a car for a short while, I think are going to shift entirely the car ownership model. I think the same somehow will happen with real estate. Obviously, it's a category that has more friction, still, as we were discussing earlier, needs much more technology to make that asset more liquid. But eventually, I think something will going to emerge from that.
No, that makes a lot of sense. And yeah, on the commercial side, you know, I haven't seen anything, but if anyone's watching and they have an idea, please reach out to me. No, but a quick plug there. So, you know, when I think about this, you know, we mentioned that, you know, the local aspects of real estate. And, you know, I remember a conversation that we had early on at BayBrazil, and, you know, you came from Mercado Libre, this, you know, this story that had this regional focus. And, you know, I remember talking to you about expanding it potentially to other countries. And I remember in our first conversation, you were really big on that. And we had a healthy debate about it, which I always enjoy with you. You know, a couple of times I probably should have listened to you. I think maybe I was right on this one at the time. I'm not sure. The jury's still out. But, you know, I remember the idea of focusing on a specific market in real estate. You know, why haven't we seen more prop techs expand geographically? And, you know, what do you think the motivation is for that? And are we going to be seeing more of that?
Yeah, I don't remember exactly what I recommended you, but from what you are somehow saying, maybe I would change that recommendation today.
Oh, it was a healthy debate, which we've had a few of. So, and they're always, as in most debates, you get to a better place, right, in the conversation. So I'm not calling you out. I'm not calling you out on live Facebook. I'm not calling you out on live.
No, I think there are a few interesting things to consider. One is when we started Mercado Libre, internet penetration was so little that we couldn't imagine a business by just staying within one country, even if that country was Brazil. Obviously, when you launched the BayBrazil, you were somewhere in the middle, because the internet was much larger versus when we started Mercado Libre, but nothing compared to what it is today, right? So I think, and in technology, scale is everything. You want to invest in a business where eventually you reach a certain critical mass, and beyond that, costs start growing very timidly, and top line starts growing really in an accelerated way. So you have marginal cost going down and marginal revenues accelerating on a per unit basis. And you need that. Clearly, in Brazil, you can accomplish that. It's been a while since you could accomplish that. So does it make sense to make a move into a new country, or does it make sense to continue investing in Brazil? And no matter how big you are, that debate is so there, and it's never black or white. There are some gray areas in the middle. Our view today is that let's make sure you first have a strong position in a market before expanding somewhere else, in particular if that market is Brazil. Because if you become the dominant player of a large category in Brazil. Then if someone else is doing something in another market, maybe with your knowledge on how to scale a business in a completely different league can help you win that market, or because you're a larger player in a large market, you have access to financial capacity that will allow you to then buy that other competitor in that other market. So I think our view today is great to expand regionally if you feel that you have an advantage because of what you built in your home market. But do that once you have already established a strong presence in that market. So the risk is stretching out too thin, right? And doing many things in many countries. And at the end, you have flags that look great in a map, but then when you go and look at what's going on in each one of those markets, you are the second or the third player in each market. That doesn't make much sense. And something just to finish with it, when we went public with Mercado Libre, I remember that we used to say that, and again, that's a different internet. We're talking about almost 10 years ago. But what we're saying is we could have gone public just with the volume that Mercado Libre had in Brazil, and with that structure and that kind of unit economic dynamic. It would have been more challenging if we had had the other half and not Brazil, because
Yes.
the other half, in terms of size, is what the same in terms
Yes.
of top line, but obviously it was much more fragmented. We were not at scale in any of the other markets, so it would have been more challenging. So had Mercado Libre at the time been only Brazil, I think we could have gone into an IPO successfully. Had Mercado Libre been the other 50%, I'm not saying not, but it would have been more difficult.
No, that makes a lot of sense. Brazil's, it's a tough nut to crack for founders that are trying to think about LATAM, and so it's definitely a really key place to win because of how the sheer size of it. When I started and I thought about building the Mercado Libre of real estate, I looked at, I decided, maybe I'll just be the Amazon of real estate and focus on a few high value markets. And then clearly when I looked at it, I decided to go AAB, all about Brazil, just because there was more potential real estate customers in the state of Rio than the entire country of Colombia. So I think that's, you've got to nail it before you scale it, as they say. So listen, I think, we've got other questions, and I get a couple questions here from the Facebook page. I think we could go on for hours on this stuff, but I think that's kind of the time allotted we have. And, if people want to jump in and send additional questions, I have a few more questions. So there's one question that we're getting from the Facebook page. How do you think the residential real estate sector will be in 10 years? And what is the role of artificial intelligence in that vision?
Well, I think it's also a great question. I think ownership of real estate will change somehow, or will adapt somehow. In particular, for people in their younger ages. So like when you're a student and then you graduate and you have your first job and you move from one city to the next, I think during that period of time, ownership will be much more flexible. So we're seeing those, first, the emergence of businesses that are trying to help students find roommates, right? And I think
Sure.
There'll be lots of things around that. At first, creating the right infrastructure for sharing an apartment in a comfortable way.
Yeah.
Then how to make sure you connect people that have some coincidences in what they're looking for, etc. So lots of things around that. Then we've seen also lots of new ideas and new projects around making houses more modular in a way. So, and I think that in the COVID times, that could have been great, because suddenly your living room becomes your studio, and your studio maybe needs to be your room as well. So we've seen lots of projects around that, and I think that will happen. If you think, again, talking about making assets more efficient, today, many square meters of our houses, we use them maybe once a week, or maybe even less than that. Some other areas are overcrowded. So if we could somehow manage those square meters in a more flexible way, depending on, okay, I have a party, things kind of go to the wall, and we have a larger space. I have more people at home because I know that they're going to stay overnight. We can reaccommodate things. So I think there'll be lots of things around that. And then something we were also discussing, Brian, offline, this thing that you mentioned around having more information about your house. Today, your car tells you when you have to change oil, what's the pressure you have on your tires, when was the last time you took it to a service, etc. I think that houses slowly are going to get into that through AI and Internet of Things and everything being connected somehow, and whatever happens at home, you will have that in the cloud, and that piece of software that will be somewhere will tell you, hey, time to do this, time to do that. So certainly it will change. The only big question mark that I have is, will that be in 10 years, as you were asking? I don't know. Maybe it's in 5, maybe it's in 20, but for sure, we're going to see that trend in the next few years. And I'm sure many more things that today I cannot even think of.
Yeah, no, data is a very interesting one. And we have Jonathan coming on board. He's operates in the US market where access to data is much more ubiquitous. And you know, in Brazil, when we started out, we just struggled to get all the information about the properties. And that was, you know, I remember one time being on a live interview in Bloomberg, and someone asked me this really sophisticated question about, and I said, listen, we're just trying to get the properties online. We're there now. We're there, but the next 10 years, it's going to be interesting to see what data we can grab. I've got a question that's just a curiosity, and I'd love to hear your perspective. I recently have a lot of friends from San Francisco that are moving into more rural areas. So this is just more of a trend type situation. Are we going to, home prices, if you look at big cities, in San Francisco, our friends over at Zumper, they put some data out that showed that rental prices have dropped 10% in the last couple of months. And there's been an exodus of, we'll see if that's a long lasting thing or is it a temporary thing. But what's your sense and what are you seeing in, I've had these conference calls and people are going to, renting Airbnbs for a few months. And they're getting out of the city. Do you think that's a long-term trend? How is that going to affect pricing? Is it all of a sudden the value of having a pool? The algorithms are going to start generating these data points where it's a pool actually used to be worth this. Now it's worth more because of these factors. How do you think about that?
Well, I think that you have there close to your house in the Bay Area, the extreme example of what was going on up until very recently. That was because you wanted to have access to those companies that offered really attractive jobs. You had to be there, and being there meant that you had to give up on having a pool, on having a comfortable apartment, etc. Net, many people were deciding, okay, regardless, I'll take it because it's the only way I can get a nice position in Google, in Facebook, and on all the new startups that are emerging in the Bay Area. Now, and slowly but steady, some companies were timidly saying, hey, you know what, you can work a couple of days away from home, and some others were opening, I don't know, things in Colorado, so slowly that was happening. I think it's going to be I don't have an answer to it, but it's going to be very interesting what happens now, because many companies realized that they can be as efficient or even more so with people working from home than they were before. And if that is the case, so you're going to decide not based on your work, because your work will be totally a parallel dimension to where you live. And if that is the case, maybe you start to see those crowded cities where people were giving up quality of life because of job alternatives, will certainly see a decline in demand for apartments and all that. And some other areas where you can have a better quality of life will probably increase. We will see an increase in demand. So let's see what happens. I don't have an answer. I'm learning this as we speak, as most of us are doing it. But I'm sure that many permanent shifts will remain out of this.
No, that's great. I guess the last question I want to ask, because I think we've got to, wrap up here. We've got about 2 minutes. I'd like to hear from you. A lot of this real estate, these real estate businesses, and we'll talk to Mate, shortly. A lot of what we're seeing is historically, most of the companies, you know, you invested in were asset light businesses. You know, I mean, Mercado Libre is a extreme example of this. Now Mercado Libre has expanded to delivery and all these other things that are maybe less, you know, but they've got the ecosystem, you know, built in. How do you anticipate, you know, given that we're going deeper in the transaction here, does this mean that there's going to need to be like larger workforces going after this? Can tech solve it all? Is there, you know, a stepping stone where people have to come in and solve a part of it, and then it's tech and you know, and machine learning and AI after? What do you think the evolution of that, and what is your comfort level as an investor, you know, considering that circumstance of asset light versus not asset light?
So I think that there are many questions within a high level.
Good. Well,
you know,
make sense of it and choose the one you like.
No, but I think in terms of asset light or not asset light, obviously we like asset light models more than heavy on capex or heavy on capital, etc. In particular, when you're operating in Latin America, where you have the typical macro cycles that each country has all the time, on top of the challenges you have of the global economy or ups and downs in the tech sector, etc. So I think in Latin America is more challenging to bet initially for businesses that require lots of capital. That being said, in all the companies we invest in, we're investing because they need capital to prove their model, and they cannot be profitable at that time, because being profitable at that time would mean that they cannot really build that platform, that base, that technology that they are trying to build for the future. So we clearly like businesses that are somewhere in the middle and are efficient, and in particular, that you do see that they will have positive unit economics once they accomplish whatever they are building in that initial phase. And maybe once you get there, then you want to double up and start building something else and something else, something else. That's a little bit the story of Mercado Libre. First the marketplace, and that became very profitable. And then on top of that became Mercado Pago, that has thinner margins, but it's a larger opportunity. And then, as you said, they got into logistics, and logistics becomes very heavy in capex. So
but
I
very
think
necessary.
they are evolving, and it's a lot related to what you were saying at the beginning of the verticalization of the models. Initially, by just connecting a few pieces, you bring lots of value. Once people get used to that, they want something else, and then you need to start going deeper. And eventually going deeper gets to brick and mortar reality, and that's when you have to start investing heavily on other things, more physical assets. The thing is, let's try not to start there. Let's start on the other end. And once you build this, then this becomes something natural. Like today, when Mercado Libre is investing in warehouses, nobody thinks they are crazy, because they've seen the evolution. They see how that piece really fits the whole puzzle, and it's actually something that will make them stickier with customers, serve better sellers, etc., etc. So clearly Amazon has demonstrated that really well over the last several years. The thing is that if you start saying, hey, I'm going to build warehouses, and then because of that, I'm going to get into payments, and we're going to get into e-commerce, it's harder to see that trajectory, right? So we always like businesses that start with an initial model that allows them to show strong unit economics, and then probably the future takes you somewhere else where eventually you need to invest heavier in assets. But hopefully it's at the end and not at the beginning.
Hernan, this has been fun. Thank you for taking the time and chatting with me and all of our participants here. I think everyone, there was a lot of questions that started coming up. I'll try to get to the questions maybe towards the end, and maybe collectively, we can respond to them. And if we don't have time today, I'll try to respond to those, through the Facebook, live or video through BayBrazil. So thanks a lot for joining us. It was great chat.
Brian. Thank you for the great questions, and I hope you found the audience found it useful.
Thank you. Okay, so we move on here, Margarita, to our next group of illustrious speakers here. Let's go ahead and do that. So I'd like to welcome our next guests here who are going to be joining us. We have my friend Jonathan Mcnulty, CEO of Haus, and Mate Pence, founder of Loft. So welcome to the show here.
Great to be here.
Good to see you guys. All right, we're all on.
Thanks
well, listen, yeah, thank you for. So why don't you state where you're located right now, just so everyone knows. Jonathan, why don't you start?
I'm in San Francisco, California.
San Francisco. And Mate?
I'm in São Paulo, Brazil.
Okay, so BayBrazil. We really stick to the name here and we live to it.
Right.
Good. So listen, there's a lot of stuff that I'd love to talk to both of you about. And, the idea of this chat is, we're going to talk a little bit more about the evolution of prop tech. We already covered quite a bit. And, I think that, we're lucky to have a diverse group of founders here, with ample prop tech experience. And, Jonathan, let's start with you as someone I've known for quite a while now. We've known each other for a long time. Your career in prop tech goes back to 2004. And, maybe you could give a brief description of your background, give us some context about the business you're building, and then we can move on to Mate and hear a little bit about what he's up to.
Sure. So yeah, 2004, that was, I sort of grew up in the world of real estate, and that was when we first co-founded a company called Building Search, which was sort of the first vertical search engine that was free for commercial real estate. And after doing that for a few years, commercial is quite a few years behind residential when it comes to technology and investment. But after doing that for about 4 years, I went over to a company called Chegg, which was all about making textbooks and education more affordable. So running all the mobile and digital teams over there. And from there, jumped on to a company called Trulia, which is who you mentioned, Pete Flint earlier, was my boss. So I ran the product growth and design teams there. We merged with a company called Zillow. That became Zillow Group. Stayed on there for a couple more years, which was a lot of fun. So really focusing on making the world of real estate more discoverable, making it easier to find homes there. After doing that, I jumped over and actually went into the e-commerce space at a company called art.com, and we sold that to Walmart, where I was the COO there. And then I left as that was going down and got connected with Garrett, who was the original founder of Haus. And he brought me on as the CEO to really kind of think about how we could make a mark in the real estate space. So sort of full circle back to real estate after being largely in the tech space my whole career.
Yeah, and also add that you were an advisor to BayBrazil at some point as well and helped us with some product stuff. So thank you for your help there. So maybe you could give just a brief overview of the business, and then we'll actually, Mate, why don't you jump in and just give a little bit of background, and then we'll dive back into each business. So why don't you talk a little about what your background is and kind of, and then we'll get into both of your businesses as well as some of the questions I have for you.
Perfect. Well, I guess, you and I have, we share a common love for real estate, but we also share sort of a common background in having moved to Brazil as foreigners. So I'm a gringo living in Brazil, a lifer, I guess, at this point, been here for about 10 years. But prior to moving down here, I grew up in Europe. I was born in Budapest in Hungary, spent the better part of my childhood and adolescence in Germany, and then eventually decamped to the US, where I went to university. So I guess, we kind of share this US educational background, and then similar to you, after some meandering, and in my case, a couple of stints in finance and a few years basically trying to soul search and until ultimately figuring out that I really wanted to start a company. So together with my existing and current co-founder, moved to Brazil in about 2011, 2012, which was just sort of at the tail end of the last natural resource super cycle, when Brazil was really booming and was, Christ the Redeemer was taking off on the cover of The Economist. We just sort of timed that perfectly before the market then took a turn for the worse, and we all know how that ended. We, in my case specifically, we did get quite fortunate. We ended up sort of building a business in e-commerce that, not too differently actually from what is happening now, benefited tailwinds that were sort of a direct result from the recession. We built an e-commerce company focused on printed materials, but sort of a very standardized, very template-driven business model that ultimately reduced prices in the market, and we sort of consolidated a lot of mom and pop shops at the time that were doing this across Brazil and created the market leader. We eventually sold that business to a U.S. Strategic player that wanted to come into the region. And then as that was happening, we, both my co-founder and I, we moved on and, started digging around the real estate market. And you were one of those folks that at the time actually encouraged us to dig deeper and kind of think about, what sort of next in the evolution of real estate and real estate models. You were obviously already quite successful with BayBrazil. I think you guys were just merging with Zap at the time. And we started to dig really deep in real estate. And so about 2.5, 3 years ago, I think that's when that was happening. That's when we went about starting Loft.
Great. And Loft, just for those that, I think most people probably know, but give us a quick overview and then we'll throw it back to Jonathan because I want to dive into his business, which is, I think people are less familiar given it's in the US and it has some unique kind of traits for that. But just give everyone a quick overview of, business today, capital raised, all that stuff, and what you're building, and then we'll dive into some more specific questions.
Perfect. Yeah, Loft, I guess in the simplest, sense of the word, is a transactional real estate marketplace focused on residential real estate specifically. So as we think about sort of just broadly the way to transact real estate, the buying and selling process, and then kind of what it also takes to integrate that in the broader sort of stakeholder community, sort of how do I effectively sell a home? How do I work with a broker in that process? And how to also renovate that home if it requires renovation? We've basically built a business that's sort of highly focused on doing that process initially in Sao Paulo and then expanded it to Rio de Janeiro. But it's geographically sort of a very focused business and fairly vertically integrated. I know we'll talk about that later on, but it's essentially sort of a very vertically integrated real estate marketplace. Great, thanks. And Jonathan, I find your business super interesting. It's a unique business you're building. If you give everyone an overview of, and maybe there's some applicable things that we can take away for Brazil, but it's very unique, in the US. I haven't seen it, much like it. So tell everyone a little bit about what you're building.
Yeah. So what we saw as we started to go down this road was really the main issues in the States is affordability of homes. And, you have millennials who are now the largest group of home buyers, putting down an average of 5% for their mortgage and taking on an immense amount of debt in that financing process. And even as millennials are successful in their purchasing, 68% of those who do purchase actually regret it because of cost. They've overstretched, they've over-leveraged, they've put themselves into really challenging positions. And if you think about how you own a home today, most people don't realize it, but you're buying this asset that fluctuates in value. And if you're putting down 5%, it's like buying stocks on a 20-to-1 margin, which works really well when the market goes up. And when it doesn't, you end up with 2008 all over again, and you have millions of people that are getting foreclosed on. And so we saw that and we said, hey, there's got to be a better way where you don't have to ask people to go into a heavy leverage situation and purchase this asset that they can live in. What if things worked a little bit more like a 401k where you sort of buy into it as you go, or investing in a company, buying stocks in a company. When you buy a share of Apple, you're not taking on the risk reward of the entire company. You're taking on the risk reward of the share that you just bought. And so we built a model that said, okay, well, what if we change that financing situation so that instead of having a lender who's just getting their interest and then you're getting all the appreciation or depreciation risk, we partner with you. And if we can partner with you and we can take on some of that reward from appreciation or risk from depreciation, we can charge you less fees or less interest. And so that's the way our model works. As a consumer, you would come in, you get pre-qualified with us. You want to buy a house or you want to sort of restructure the house that you already own to lower your monthly payment. You partner with us. You buy what you can afford. So if you can afford 10%, you buy 10% of the equity. We'll buy 90%. You have a fixed monthly payment. It does two things. It buys equity back from us at the current price, and it pays our fee, which is much less than a traditional mortgage. And it's less because we can take advantage of some of the appreciation that we'll see over the long term. So we can lower the cost of carrying the capital, carrying this asset. And the other thing it does that's really nice is because you're buying equity at whatever the current price is, you can buy more at any time at that current price, or you can sell it back to us and tap the equity that you have. So if you have a big tuition payment, you can log into your dashboard, see how much I own 16% of this house, it's worth X. I need $20,000 tomorrow. You go in there, you click a button, you sell 2% of the house back to us, money's in your account the next day. So we've liquefied the asset and made it much more of an asset that's easily sort of invested in or divested in, depending on what the needs are of you as an individual.
Well, that's it's fascinating. And Mate, how do you think of the current reality of Brazil in applying something like that? We've got the sophistication of like the lending and all those things, those challenges that exist today. Seems like it'd be a tough thing to pull off in Brazil, kind of given the current, the current environment. You've probably benchmarked around the world and looked at a lot of stuff. What do you think the biggest difference is in the U.S. market in terms of real estate, and why is that an opportunity for Loft?
Yeah, I think that, it's obviously very exciting and hugely impressive what you guys have pulled off, Jonathan. I think in Brazil and Latin America in general, across the board, we're still a couple of innings away from being able to apply this reality, or certainly sort of at least in a broad-based fashion. I could see this working in sort of more niche applications, but I think for now we're really still figuring out fundamental building blocks. And when you talk about sort of, what are some of the sort of fundamental ingredients for a efficiently transacting real estate market? You look at the US, you've got a fairly well organized broker market and a broker community. The MLS, or sort of collection of MLSs across the country, are certainly a sign of that. That essentially real-time data, real-time ground truth data. I think that's really the key to the story here. It just doesn't exist, or it doesn't really exist on a broad-based level in Latin America. So I think that, why does it not exist? There's lots of, we could probably go on for hours here, talk about the MLS, probably have a very niche audience that would be interested in it. But, the fact that the broker community is not well organized, that you don't really have the same kind of broker exclusivity that you do in the US, and hence also not a lot of collaboration on the broker side, hence also a lot of fragmentation, just led to a market in Latin America where it's just really hard to access information, hard to access sort of ground truth data, at least in a real time fashion, which then brings about all sorts of knock-on effects. Liquidity is lower. Liquidity is also lower because access to capital generally and sort of funding rates up until recently have been very expensive, and rates have been very high. But I think fundamentally you just have a lack of transparency in the market on the data side. So it's just much like the entire process of determining what your property is worth or what it should be worth is a much more arduous process. And it's usually a process that still to this day is very artisanal. It's based off of talking to brokers, obviously, but talking to neighbors, talking to friends and family. And I think even in the US, everyone sort of overestimates the value of their home. What we find in Latin America, that is exacerbated by several factors. So, if in the US, you might think your home is 3 to 5% worth more than it actually is, in Latin America, and in some regions, some neighborhoods, that can be as high as 30, 40%. So that's, I think, kind of one of the key differences. There's other niche differences, but this is really, the big kahuna.
Is that related just because the lack of data in general, and so there's just lack of information? What do you think the primary kind of disconnect is?
Yeah, I would say it's not the lack of existence of data. It's just that the data has never been collected and sort of put together in a sort of interconnected pool, the way that the MLS works in the US. So you can talk to a very knowledgeable broker that'll be super knowledgeable about a specific region or about a specific neighborhood, and will sort of have semi real-time data because he's in touch with all of the building managers, he's in touch with the community, but it's a very, very micro level real-time data set. And again, it's very siloed. So those silos have never been connected. And I guess a lot of companies nowadays, and us included, are trying to connect these silos and trying to kind of find a way to bring transparency on the data side, and then unlock off of that a whole bunch of other things. I think if that were to happen, and if you'd have platforms that really evolved in a direction, then we could maybe start dreaming about what you guys have built there in the US.
Yeah, we definitely benefit from the fact that for, I mean, when Trulia and Zillow were launched, it was how do you digitize and bring information available, power to the people is one of the big sort of missions there, and making that transparent. And then when you start to digitize and amalgamate all of this information, then you can start building models on top of that. You can start accumulating more information. You sign up all these MLSs, which, for us, we thought it was painful having 700-800 MLSs. It sounds like Brazil might be a little bit more painful than that. But once you get all this information, then you can start really building the models on top of that. And our model would not have been able to work 5 years ago because the valuation of homes has to be so precise for us that you can bank on that being very, very accurate every month, because you're literally changing, equity is changing hands in a model like this. So you can't, you're off by a few points, you can affect people in many, many thousands of dollars on such a large asset. So it's not until very recently that models like this have been able to exist because of that. And then also really just because of, new types of technologies like, ledgers that can track the individual units of ownership on a very sort of large scale.
Yeah, when you talk about ledgers and there was a couple questions earlier. I'll just weave in a question from the audience that talked about blockchain, which is, it's something that, is a bit of a buzzword. And, how do you, just to incorporate one of the questions from the audience is like, how do you see, the blockchain, playing a role in, whether it's in, real estate, finance, how do you envision that? Is that something you guys talk about internally?
Absolutely. So, blockchain, when you think about our system, blockchain is a decentralized ledger system. And it helps a lot when you have, areas where there's a lack of trust. It can be very, very powerful. For the US in particular, and for a company like ours, we don't necessarily need to decentralize a ledger because you can trust us, essentially. There's no funny business. We're recording deeds of trust here. We're a reputable company. There's nothing that's going to be sold without you knowing, that type of thing. So we have a very similar technology that we've built, which is a ledger system, which breaks a home into these little bits of ownership, basically, and you're transferring those bits of ownership or those equity pieces between the partner and who we are, and the consumer, who's the owner of the home. But it's key when you think about what's coming down the road, because when you think about the biggest challenge of the real estate market, or what we view as one of the largest challenges, is the liquidity aspect. The lack of liquidity within real estate is huge. I mean, we're talking about right now in the US, $8 trillion in sort of untapped equity in homes, where consumers have built this massive amount of wealth, but it's not easily accessed to improve their lives. You may have $500,000 or $100,000 in equity wrapped up in your house that you could in some way tap, but you still have $15,000 in credit card debt where you're paying 15%, and $10,000 in student loans where you're paying 9%. And if you can think about, if you can create a system that allows for this liquidity to allow you to sort of reprioritize the debt structures that exist within the world, because you're talking about an asset-backed investment versus something like credit card debt, which is obviously not backed by anything, you can start to make people's lives a whole lot better and more efficient. And so I think that the liquidity aspects that things like blockchain or ledgers or new types of financing products like ours can do to radically shift how home ownership is viewed, and how it can actually make not only your home ownership life better, but the rest of your life better, is going to be a key piece to what the future looks like.
Yeah, Mate, I'm curious. I think that we played around with the iBuyer stuff and at Zap, and we're not really doing that right now. Given the volatility, I mean, you guys seem to continue to be aggressive. You're growing, you're hiring people. How do you deal with just the current volatility? And tell us a little bit more about how you're able to kind of, do you think this is a greater opportunity now? Do you think it's, how do you look at risk? I mean, you're a smart guy. You look at risk. Tell us how you take, how you approach that at Loft.
Good question. So first thing I'll say is that at least when you think about sort of the, economic theory of this all, if you have volatility and you can somehow kind of price that volatility, you see how risk behaves, you should be able to, as a market maker, you should be able to make even more money in times of volatility. Now, I think that, the second part of this question or sort of, as I think about it is, Latin America has always been volatile. You and I have been living here full-time or part-time for the last, better part of the last decade or so. And yeah, I think I've lived here in maybe 1 or 2 years that were in crisis years or weren't sort of considered, at least, officially recessionary or sort of years where GDP growth moved sideways. So I think that you just kind of accept volatility as second nature, and it almost becomes sort of a constraining factor that really bolsters the creativity in the organization. You have to make sure that your business model functions within a volatile environment. When we launched in early 2018, and certainly when we started ideating around the business model in 2017, Brazil was still kind of within the realms of the last crisis. 2018, we started to get out of it. None of that had been reflected sort of in real estate prices or liquidity yet. So the market was still very slow. We were still talking about the Fed-like rate, the Selic, as you mentioned, was at sort of 15+%. So cost of capital was essentially prohibitive. So we really had to come up with a model that I guess in some sense would be an all-weather model, a model that really could function rain or shine and could work in volatile times or in times that potentially seem like less volatile. Ultimately, when you look at real estate in Latin America, it's a relatively unlevered asset class. You alluded to the U.S. In the U.S., because the market is so transparent, because the market is essentially perfected or nearly perfected, it's also highly levered, and leverage has always been cheap. In Latin America, like real estate is a relatively safe asset class or regarded as a relatively safe asset class. People have usually been buying real estate as a hedge against inflation in some cases. So I think that has helped kind of actually attenuate volatility in the real estate market as you compare whatever other asset class you want to benchmark it to, whether it's public equities or whether it's just any macro indicator. Really, real estate has moved within a more narrow band in terms of price and also liquidity. The market turns a lot less than it does in the US, but it also turns within a tighter band. So in a year where things trade downwards, they trade down less than they would in the US in a down year. And the converse is also true in a up year. So interestingly, like once you kind of peel the onion around volatility, what you kind of get is a market that, again, specifically talking about residential real estate, if you were to talk about corporate and other sectors, I think that those are completely different dynamics. But within residential real estate, you're especially in sort of more kind of established neighborhoods. If you're looking at sort of where the real estate value is mostly concentrated, those are the denser and more city center like neighborhoods of Sao Paulo and Rio and really of the tier 1 cities. And for those that don't know Brazil that well, it's actually a very sort of urbanized country. You're talking about a much higher degree of urbanization than the US, for example. So you've got a lot of value concentrated, and a lot of that value is perceived as safe, so it ends up being less volatile. Yet, because of the lack of data and because of the lack of transparency, you end up having, I guess, larger arbitrage opportunities. So, at the end of the day, as you said, it all comes back to risk and pricing the risk reward and making sure that you actually do position yourself as a market maker, which any marketplace really is making a market, whether that's a Mercado Libre or an eBay or even an Amazon in its current in its current incarnation is a marketplace, is making the market. We do the same. We just do it with assets that have a higher ticket price, have a higher, I guess, average ticket attached to it. So, you got to be more careful, but that's sort of our DNA. That's how we were born.
Yeah, that's awesome. Switching back to the US for a second, Jonathan, it's interesting. You were at Zillow, with Trulia and then Zillow, and, there wasn't like a whole lot of, I don't know, from my observation, like a ton of innovation that happened, in the first years. It was kind of, like that just, like you came later. So like when, you weren't there in the beginning, but it was more about just like getting the data on there. And then all of a sudden in the last couple of years, 5 years from now, I mean, there was, I think the Zestimate was like truly innovative in it, when it launched. I mean, that was like the first kickoff of of innovation that I saw in real estate for decades. And that's the first kind of like, wave of innovation that happened. And then Trulia and both Zillow, had all kinds of innovative products around crime maps and all these, things that happened. But essentially they were just search tools. And then, so what was the kickoff? What was the spark that, because now we look at a business like yours and it's like, this is a very different thing that, as you said, 5 years ago was not possible. So what exactly needed to happen for this to become a reality?
Well, for Zillow, I think those early days for Zillow and Trulia, and I wasn't there in the very early days, but it was about, there's, having so many disconnected MLSs, having so many different brokerages where you had all this fragmented information, getting it onto one site, getting agreements in place, understanding the rights that you have to that data, navigating that process took an immense amount of effort. And the huge advantage that those companies have and actually still have today is the fact that, a large majority of their traffic comes from organic search. And so by solidifying the fact that they had all the listings, by being the first movers there, now you're basically getting a ton of traffic where you didn't have to do much to monetize that traffic or worry about other people taking it because you were the #1 spot and in fact the #2 spot and #3 spot with all the different sites that they have now. And so what I think the first real change that happened there was, hey, they needed to figure out how to monetize, and they realized that if they could put different brokers on top of other listings, those brokers or agents would pay to be on there. And suddenly sort of, 1.0 revenue model came about, which was a heck of a lot better than ads at the time, and said, okay, these agents will pay, much larger, costs per impression to be exposed on these other listings that didn't happen to be theirs. And it caused quite the ruckus in the space, but it worked really well. And now that was a huge business for Zillow and for Trulia. What happened after that, though, was you hit a ceiling with how many agents can you be charging? How many eyeballs do you actually have in the space, right? So 150 million monthly uniques for a site that only operates in the US. There's not that many people buying and selling homes every month. Like, there's 5 million a year or so. So how do you can't just keep charging more and more here. So where's the opportunity? Well, it was funny. I was talking to investors early on and they were like, it's crazy. You're talking about the largest company in the largest space, real estate in the world. Like, so you're talking about the largest market, US market in real estate, which is one of the, that and food are basically the biggest markets. And their market cap is, what was it at the time?
10 billion? Yeah.
10 billion now. Yeah. And you're like, how is that possible? Where's the money? And it's like, well, the money is elsewhere. The money's not in the advertising. The money's literally in the money. The money's in the money. The money's in the banks. Like, the banks are the ones who are making all this money because they're the ones who are investing directly into these assets. And so I think what happened was you reach this tipping point, but then you have to shift business models, and you have to do it in a way that's not going to completely burn bridges with agents, right? So you've got all these agents paying. If you're going to go and start disrupting them with an iBuyer model, that's a delicate dance. And so the shift had to happen very strategically and over time. And that shift was going on before COVID. Obviously, COVID put a dampener on that shift that was happening. But it's an ongoing shift. But I think Zillow and Trulia are now trying to innovate into how can they get more into the transaction? How can they get more involved in the money, buying a mortgage company? How do they figure out how to get more juice out of this thing, which is the largest industry? And right now, they're really just kind of scratching the surface.
That makes a lot of sense. Well, let's pull out our crystal ball here. I don't have one here with me, but we'll just have to all imagine together. My question to both of you, Mate, you can start first. Who owns the transaction flow in the future? Is it portals, agents, liquidity providers, or someone else altogether?
Well, it's definitely not going to be the way it is today. The way it is today, if you think about it, it's sort of a peer-to-peer transaction, essentially, that's sort of intermediated, whether it's by brokers or somebody else. I do think that you are moving towards a world where that transactional experience is going to be kind of intermediated by a clearinghouse. Now, I think it's anybody's guess who that clearinghouse will be in the future, but I do think that the same way that you moved in tons of other industries from sort of more artisanal peer-to-peer transactions, there is a sort of industrialization going on, and you had it in retail, right? Amazon is sort of eating offline and online retail alive. The same shift is starting to happen in real estate. I think, again, it really remains to be seen who will be the winner there. But I do think that there is certainly, at least on a local level, there is an opportunity for companies to sort of, take large chunks of the market, whether it's, potentially a Zillow in the US or us in the Brazilian market, for you to really capture a large chunk of the transactional pie. And once you do that, obviously also lots of the added value products, like Jonathan mentioned, whether it's mortgages, financing, insurance, and so on and so forth. So I do think that it will be it will be a tech company. It just really remains to be seen who and from what angle. But I do have very high conviction that it's going to be a transactional platform, and it's not going to be a sort of traditional low NPS intermediated model.
And do you think that, on the, if you look at kind of the data, one of the things that we suffer with in Latin America is the data. Actually, let me back up on that from that in a second, and I'll get to that in a second. But if you look at the US, you've got 1%, as you saw in the opening, probably. So has this become 50% of transactions are done in this kind of like iBuyer format? Is it 10? And then, and then what's the future of the agents? Are they service providers, or what are they, how do you, predict the future of the role? So there's two-part question. One, how many transactions will be happening in this kind of model that you mentioned? And then two, what's the role of the existing agents and brokers?
I think ultimately what you're going to have is sort of much more dynamic pricing and much more price discrimination as well. And all of this incorporating sort of the value or sort of the net present value of the asset, rather than the asset sort of being priced on a more static basis. And what does that really mean? I mean, today I can advertise my home on a listing site anywhere in the world, but I'm not really adapting that price on a dynamic basis. So what iBuyers are doing, they're telling you, today I'm willing to pay you X for your house. And for somebody that's, looking to sell quickly, is looking to make an instant sale, I think that's a very valid value proposition. And I do think that that model will continue to be sort of a feature as part of a larger platform. I think that, Zillow, and certainly in our case as well, like I think that iBuying, or sort of giving you instant cash for selling your house today, is going to be a part of the transactional pie, is going to be a part of the 100%. I think by definition, it's not going to be 100%, because there is a lot of, I guess, carrying costs involved in holding that asset and having that asset flow through your platform. So I do think that it's going to coexist. And again, we're seeing these moves happening in the US. iBuyers are buying listing sites, and listing sites are starting to get into iBuying. So I think that ultimately you're moving towards a world where you're going to have hybrid products. You're going to have platforms that are having all of these things as features as part of the platform, precisely to be able to price discriminate and offer exactly what you as an owner are looking to do. And by the way, I think that what Jonathan is doing at Haus fits squarely into that, because today we're also in a world, largely speaking, especially in Latin America, where you have two extremes. Either you go and rent a house, or you buy 100% of it. But there is no such option of buying 2% or 5% or 10%, or sort of gradually increasing your ownership. So I think that the asset is going to be priced more dynamically, and the interaction of kind of user to user and the asset in between that is going to be intermediated somehow by a platform that, again, will have iBuying as a feature, when we'll have a whole host of other technological tools as features to enable that transaction.
No, thanks for that. I'm gonna incorporate a question here from the audience. This is a good question kind of for you, Jonathan, because I think it's where the US market is more developed in this area, which is around institutional money and REITs. And then we'll get back to Mate and just his thoughts on that. The question is, do you think institutional money will be a big player in the ownership side? I guess in the US it already is, right?
It is and it isn't. It depends on what market you're talking about. So REITs right now, or institutional money in the multifamily market, is a very large player. So, high density, complexes where you have many rental units, they're a huge player. And if you look at sort of, because of the amount of investment that's come in from institutions, if you look at sort of or 2007 peak of prices in multifamilies and looking at where cap rates were and whatnot, now those prices are upwards of 70% above what that previous peak was. if you look at their penetration rate in single family homes, institutional money in single family homes is actually maybe 1.5%. And that has a huge impact on what home prices have done since the last peak as well, because they're not nearly as much, they're about 20% above the previous peak compared to, sort of the area where institutions were coming in heavy and they can drive those cap rates all the way down. They're like, hey, as long as I can get my 5% cap with a kicker on HPA, I'm good. And so it's had a huge impact on both of those markets. And even though they're very similar, they're very different because of the way that institutions have sort of entered that market.
That's great. Mate, around the experience, I know that you're really, you're streamlining, you're trying to streamline this whole process, and you want to make it, if it was more like an e-commerce transactions, what are the products of the future, and what would you abstract away from the consumer?
Yeah, I think that one of the things that we've certainly seen during COVID, I think that's universal across the world, and we've certainly felt it in our business as well, is just that the kind of consumer side adoption of more digital tools as part of the transaction has increased a lot. So whether it's a virtual tour, whether it's sort of using a 3D model in your journey of discovering a home, I think a lot of culture inertia, frankly, that existed, the sort of notion that, look, I'll use my Sunday just to visit open houses and cram 10 open houses into my day. I think that notion all of a sudden came to a halt and forced people, especially people that had to move for some reason or have to move for some reason, to look for new tools. So I think that as you think about the toolkit that companies like us and other players across the world already had available, all of a sudden you see a heightened engagement. And I think that goes from the visualization aspect, which is sort of the top of the funnel discovery, all the way through the transactional piece as well, which again, in our case, we've done plenty of 100% digital transactions over these past weeks and months, where literally even the deed and the title was transferred 100% online, in a process that probably pre-COVID would have taken years to get digitized. But we've seen that kind of change overnight. So you've made really big progress there. But I think that the biggest sort of sea change actually that not a lot of people are talking about yet, to me, is just the adoption of sort of visualization tools and the journey. Like I can do 2 or 3 times as many virtual visits in the time that I can visit physically. Now I may still want to visit that apartment or that home to kind of like do a final sanity check. But the same way that today, when I go to a car dealership, I'm going to go there to probably close a sale. I'm not actually like starting my discovery journey at the car dealership. I'm going to have narrowed down my choices to maybe 1 or 2. I'll do a confirmatory visit, and maybe I'll still shake hands with the dealer and then take the car off the lot. I think that if we got closer to that type of experience in real estate, I think that would be a big step already. But certainly, I think there's nothing technological that will prevent you from getting as close to an Amazon-like e-commerce experience in real estate. It's obviously a big decision, so the journey is longer, but all the tools are there. And now all of a sudden, what we have is just the consumer side adoption and the consumer side acceptance of these tools, and really seeing them as for what they are, which is extremely productivity enhancing and convenience enhancing.
Yeah, just as an anecdote, in China, the lockdown started, the last week of January, first week of February, during their New Year's celebration. And, similar to Carnival, like, it just shuts down. Normally people travel, but, that first week of February, people were not traveling and not leaving their homes. And I think it was so fun, or one of the Chinese, kind of put out some data that said until January, there were about 10,000 daily uses of their virtual tour technology that they built. And during the lockdown, that increased to 350,000 a day. So 35x in use of that kind of virtual, that virtual tour technology. And so, what is it going to look like, in a normal, maybe it goes back down. It's not going to go back to 10,000. It's going to go back to maybe 150,000. And so, I think this current environment is an accelerant to all these things, happening. And, one thing that's interesting, Jonathan, I wanted to hear from you, is transactions are made easier with financing models like the one that you're building. It's much more creative and, reduces friction. And is the velocity of turnover of housing, is it going to increase? What is your anticipation there?
That's a good question. So yes, one of the reasons that you see the velocity so low right now is because of the costs associated with selling in the US. So when you think about the costs with selling your house, it's close to 10%. It's 6% just for the agent, buyer and buyer side and seller side, which you can argue who pays for that, but call it the seller. And then you've also got title transfer fees, title insurance, escrow, warranties. I mean, these things add up, and suddenly you basically look at it and you're like, well, I've been in my house for 6 years. And I've seen decent appreciation. If I sell now, can I break even-ish? Like, I hope so. And so you see a lot of people handcuffed by housing because of the transaction fees. So if you can start to eliminate those fees or drive them down, then you can start to relieve the financial requirements that are associated with selling or transacting more frequently. And so I think what you'll see is, not something that drops down to sort of rental frequency of a year and a half, but something that's sort of in between that and, kind of 10 years is the average right now. About 80% of people sell within the first 10 years. First-time home buyers are actually faster because for entry-level homes tend to be sort of like 6-7 years. But yeah, absolutely.
In Brazil, I think people hold on to their house a lot longer, right? It's not quite as frequent, and probably for some of those reasons in terms of the complexity of the transaction, the access to financing. So that's something that, as things become easier, I think that across the board, we'd expect that, to accelerate. Matej, you obviously
just looking at the data, Brian, I think one thing that you actually find around the world, this is not just Brazil. It's one of the sort of interesting, almost universal truths, is that the higher the sort of transactional friction, especially the transaction cost, so call it sort of in the UK, you've got stamp duty that you have to pay when you're buying a home. In Brazil, you've got kind of a similar concept of that varies by region, but there's a very close correlation between the transactional friction and transactional cost and the liquidity of the asset. So I think that, as companies are able to kind of erode that transactional friction, both from an experience perspective, but then also from a cost perspective, you're going to see, you're expected to see more liquidity.
Yeah, in terms of the cost of the transaction, one thing that always kind of, and this is, we have an audience here that's a mix of, mostly Brazilian audience, but Jonathan, explain to people what title insurance is and how that works in the US, because that's a foreign concept for us. And why does that exist still?
Well, that's a really good question. There's some cool startups that are working on solving that or coming up with better solutions. Title insurance is basically, so when you look at the title of a property, when you're the owner, you are technically on title. You own the property. You have the deed of trust to that property, or you own the deed of that property. And then if you have a lender, they can be on the deed of trust to say, hey, well, they're owed this amount on this property. When you are borrowing money from banks or other folks, institutions, they want to make sure that nobody else has a recorded lien on that property. And so title insurance effectively says, we will insure to make sure that no one else has a lien on this property that's unknown to us. And if they do, then the insurance is there to cover it and make sure that the investor or the lender is protected. The thing that's kind of screwed up about the industry is the fact that they collect about $15 billion in fees every year. And the amount of payouts as an insurance company is about 800 million a year. And so quite the margin business. And a reason why some states and local counties had actually just started offering their own insurance for a much, much, much reduced cost, because they look at how egregious that sort of margin is and they realize that it's
mandatory, right? It's a mandatory fee.
Yeah, it's a mandatory fee specifically because the lenders mandate it. And in fact, there's a whole thing in the US called RESPA, because what was happening was lenders were basically saying, well, you need title insurance and use our title insurance guy over here. And then they were sending the business over there, and then Mr. Title Insurance Company was giving a kickback to the banks for using them. And it was this whole very, screw over the consumer type cyclical thing. And the government had to actually step in and say, no, that's not okay.
Yeah. Matej, question for you. You obviously got a lot of inspiration from your business from Open Door, who was kind of the pioneer of this iBuyer, business. who do you look at around the world, and where do you benchmark, and where do you see globally, really interesting things happening outside of our markets locally?
Yeah, it's a good question. Look, real estate is obviously a super local industry, and there's plenty of local idiosyncrasy, as you guys just alluded to, with title insurance, which luckily in our case is one of the few things we don't have to deal with. So that's sort of a weird U.S. regulatory capture problem there.
We have plenty of things that we deal with, though, right? There's plenty of other things, right, that you could expand on besides title insurance.
Certainly. There's a long laundry list. I think that, what's probably most useful to the audience is that you see innovation in very different pockets and very different places around the world, precisely because the sort of bottlenecks or choke points are not always the same, which kind of makes it more challenging to port over these models from one country to the other. And Jonathan kind of alluded to that. Sort of the biggest, I guess, tech-enabled real estate platform in the world is sort of a fraction of the underlying market, and that's tends to be true in most places, with a few exceptions. I think Australia is one of the markets where you do have a large incumbent, but generally speaking, we as an organization, we take a lot of inspiration from many different companies, but usually ends up actually being in sort of adjacent industries and not necessarily in real estate per se. China, that said, definitely has some interesting stuff being developed. I think that the consumer adoption, as we were seeing now during COVID, like all of a sudden we have a step change in adoption. Well, that's been happening in China at a much more rapid pace. So now the digitization in China is sort of a second derivative of a very rapid evolution, and there's frankly a lot of things that we looked at there, and we saw this could be interesting in Brazil, but Brazil was still lagging. I think now we have a very interesting kind of live lab experiment globally, where I think that a lot of interesting things that might work for smaller transactions, let's say it works for e-commerce at Amazon, well, maybe it now works also for a transactional car platform. Maybe it's also going to start working for a real estate business. So I think that's kind of the axis along which we're thinking a lot as an organization. It's like, how do you get closer to call it the transactional experience of buying or selling a car on Carvana? How do you make that more applicable to what's happening in real estate? And again, e-commerce is just a really big, a really big inspiration generally.
Hi, Marguerite.
Hey guys,
Are you enjoying the chat?
I love it. Thanks, guys, and congrats, Jonathan and Mati, for the enterprises you are building. Well, obviously, the COVID-19. So I have a few questions here submitted to us during the registration process. Actually, quite a few questions. We won't have time for all of them. But obviously, the pandemic is changing the way we live, the way we work, the way we play. Antoine Colasso from Menlo Park, our friend here, asks, what changes will last permanently in commercial and residential real estate as a result of COVID? I think it would be great for all of you to weigh in.
Brian, do you want to start maybe? We haven't heard you answer any questions yet.
Yes.
Sure. I mean, I alluded to this a little bit with Hernan, and I do think that we've seen a massive trend over the last decades of gravitational pull to large cities, right, and the verticalization of cities, and I think that this is the start of a new era. I think that we're going to see a lot of people moving to the countryside, and this may be a U.S. centric response, but I think that even in other markets as well, that's been the trend of the last, the great migration to large cities and, the expansion of cities. And so I guess my response would be the start of a new era and the, spawning of people, moving back to the countryside. That's kind of, I don't know if that's like a personal thing, if like, I just like living out here in the country, but it could be projecting here, but I would say I think that's a slow trend that has been growing, moving towards cities. And I think that we're going to start seeing a reversal of that trend. That's my answer.
I would be counter to that. I think
because you just bought a house in San Francisco.
Oh, I bought a house in San Francisco a long time ago.
All right.
But I would say this. I think humans have short memories, and I think you're gonna see people get through this and fall back into a lot of the same habits that they did before. I do think you are going to see people moving to areas where there is more space for sure. But there's a lot of other things that attract people to big cities than just the jobs. And I think you're going to see how strong those cities' attributes are during this time. You know, I think, you know, New York went through this after 9/11. They had a huge outpouring of people leaving the city, selling properties for dirt cheap because they needed to get out. There was a huge amount of fear. And people went in, they scooped those properties up, and the market rebounded just like it did everywhere. And I think that, you know, you're going to see opportunities that are going to come out of this type of reaction that the humans naturally have in times of stress. But I think people will fall back into the same habits. They're going to realize that, you know, more densely populated areas have a lot to offer. I mean, there's a huge amount of advantages for having people in more centralized locations as a society, from a health perspective, hospital perspective. There's just a lot of benefits from being in more populated areas. And do I think that, you know, open spaces are going to be more important now? Yeah. Do I think people are maybe moved to the outskirts of cities, into the suburbs? Absolutely. But I don't think that you're suddenly going to see everybody living on a farm, you know, sowing their own crops and living off the grid.
Living off the grid, their solar panels and yeah. Come on up here, man.
I know it's beautiful up there. I'll come and visit soon.
Mate, what is
you were definitely, Brian, you were sort of a pioneer, I guess, certainly in my circle of friends, folks doing the rural, I guess, reverse migration. You know, what I'll say is that, and there's actually a famous quote by Bill Gates, where he says that people sort of tend to vastly overestimate the impact of certain trends over the next 2 years, but then vastly underestimates the trend on sort of a 10 or 20-year horizon. So I think here we're seeing the same thing. I think that you're going to have people kind of accepting that based off of this experiment that we all ran, this sort of large-scale experiment of running a company or running a large organization over Zoom, that this is actually working, and that, you know, you could be working less days in the office, but not necessarily without human contact. I think that the number of companies that will move to sort of a all remote setup will be much smaller than I guess folks will sort of estimate today. And I also do think that, especially kind of thinking about Brazil and emerging markets generally, you know, the problems that Jonathan mentioned are just many times exacerbated here. If you think that access to healthcare and access to education and access to sort of infrastructure generally is a challenge, you know, in rural America, I mean, imagine outside of the big cities here in Brazil. So I think that, you know, here, what you might see is, again, people kind of valuing the spaces that they live in much more. People kind of going for larger square footage if they can, also because their commute all of a sudden is less relevant. But I don't think that people will sort of abandon the larger metro areas to move sort of en masse to rural areas.
Okay, and I'll read only one more question from our audience and pass the ball to you again, Brian. Okay. And thanks everybody for submitting questions. Sorry that we won't be able to get to all of them. But guys, we have people from all sorts of places joining us today. We have people from New York, San Francisco, São Paulo, Paris. And I'm going to ask now a question that came from Medellin, somebody in Medellin, Colombia, about how this will impact the future of work. Is the trend of work from anywhere, asks Rodrigo Sanchez Rio, is the trend of working from anywhere a net positive or a net negative for the Latin tech ecosystem? Can we attract the best of the world, or will the best tech professionals in Latin go work for global companies? Mate, I think you can start waiting on that.
I think it's a very good question, and I think that you know, to the extent that there's founders here in the audience, Latin American founders, I would highly encourage everyone to think about this, because I think it's a you know, I don't know yet. So I think the short answer is I don't know what the exact net effect is going to be, because we also don't know yet to what extent international companies or sort of global companies will adopt a sort of all remote culture or fully remote culture. That said, if we do see a larger move to fully remote, I think that the Latin American companies that will be able to adapt to this will have interesting opportunities. I do think that there's going to be sort of a global leveling of skilled labor. There's going to be a leveling of and sort of less of a concentration, I guess, of the salary pool in a few regions like Silicon Valley. So I think that leveling will benefit companies that will adapt to this trend. I think that there's a very big risk for companies that will be ignorant to this trend to lose talent to foreign players. I think that especially within technology, we're really talking about, Brian, you called it a sea change. I certainly think that you're seeing that the big guys are getting bigger, Facebook, Amazon, Google, and so forth, and certainly also the Chinese players are getting bigger. So I do think that it's a threat not to be underestimated. The ability for sort of large tech players to come into the market, and they're already around. I do think that the intensity with which these companies might be recruiting in Latin American markets might increase.
Go ahead, John. I'll jump in after. Go ahead, John.
Yeah, so this is such a tricky question. I'm a little fearful of what's actually going to happen in the future based on this, because what we're seeing is a lot of companies are going to start adopting this remote environment, whether it's a hybrid remote where, hey, the executives get together every week or 2 weeks, and then rest of the folks can kind of work remotely because, hey, they're working great. And I think partially they're working great because they already worked together and they really understood and trusted each other. And so whether you're working from a living room or whether you're working from next to that person, if you've already established that trust, it's pretty easy to work well together in the future. The thing that scares me a little bit is the fact that if you're going to have a bunch of people starting to work remote, suddenly you're going to have to start quantifying their performance in different ways. And if you start quantifying them in different ways based on new HR platforms, which I think is going to be necessary, you start to open up the field to more people, because you're like, look, if this is how we're quantifying, and this person who lives in Brazil is a lot more cost effective than this person who lives in San Francisco, when it comes to hiring and firing, who do you think I'm going to go with? Well, I'm going to go with the person who's, checking all the boxes on my quantified HR platform and is going to cost me a lot less. And so what you're going to see potentially is that would be an impact that would be net positive for areas where you have less expensive labor, and then a net negative, obviously, for where labor is more expensive. But what it does is it also it causes issues for innovation, because suddenly you're going to start to see a lot more sort of large companies looking at this as purely just a cost savings, and then you start to lose culture, and you start to lose innovation, and you start to lose the idea of a ground up or bottoms up product development process. And if you start losing those things, innovation can actually slow down. And so without the right types of processes or tools or organizations to actually manage that appropriately, I think that there's a lot of risk that comes about with this type of thing. And not to say that it's impossible or some sort of dystopian thing where everybody becomes self-quantified and this is my IC role and this is what I do and I push the buttons on the computer all day and then I go into the next room where my family is. But it's a little scary, because you look at the big things of innovation. It's like, hey, we started this thing in our garage and we built this massive company, and it was like, hey, we listened to the teams and we built these grounds up products. And that's a lot of like how truly Anzilla was. And so I'm just a little scared where, do you lose the innovation? Do you lose the ability to get the smartest people in the room together to solve these problems? Or do you think we can do that remotely? Do you think you can get people in the virtual room together to really solve those problems together? I think that's a big question mark for me.
Yeah, let me jump in here just to kind of, I remember reading Thomas Friedman's The World is Flat like 15 years ago. And I was like, wow, this is, I was in Latin America and I was like, I can build a product that I sell in the US and I can have a team in Latin America. You've got voice over internet. And I remember like having that realization, and I swung the pendulum pretty far in my company when I was CEO. And actually, I just didn't like remote work. And I had a few engineers in my team, and they would, hey, let's have a remote office. Let's have, more flexible work. And I was pretty adamant about it because of just productivity. And, I just didn't think it was culturally the things you'd mentioned. I'm going to again, take another extreme view of this. I actually think that, you know, I'm starting a new project right now. I have 8 people on my team. I've never met in person half of them. And I've actually never, I feel extremely, I do think that there's a missing component of being able to be in the same room. I think that the way you fill the gap is that you have maybe quarterly get-togethers, and you have that, you know, that kind of, you know, that you kind of supplement the beer after work, or the water cooler talk, or just the serendipitous, you know, connection with people that happens. But I'm actually going to take the view that I think that's the future. And I think that we're going to see teams working in different places. I think that, you know, it wouldn't be surprising if we had someone in Recife, you know, just that wanted to be closer to their family. And so I'm going to continue with my kind of more rural, you know, thesis that I had from the start. But again,
so
who knows?
I like this, but where do you, so if people are moving into the rural environment,
yes,
and only working on a screen, that seems pretty lonely to me. Where are people going to get their social exposure?
It's from their community and their local communities. And, you know, listen, I don't have it all figured out, but I love the debate. We should set up another conversation, and we can maybe continue this offline, maybe in person.
No, let's set up another one and involve our members and our entire network. The future of work. This is a huge thing.
Yeah. Cool.
And maybe that's your answer to it right there, because I think we'd all love to grab a beer together now. So
so he's got a 6-hour drive ahead of him, so he can get that cold brewski.
But we did have a nice discussion, and I think that, you know, we had some fun realizations online. So I guess the answer probably is a hybrid of things. But I am surprised at how effective you can be without actually being in the room with someone. And so
100% agree with that.
We'll see. Yeah. Never know. Okay. Well, thank you. I guess wrapping up here, right, Margarita? Any? I guess I'd like to thank everybody for participating and contributing to a great conversation. Hopefully, our audience enjoyed it, and this will be available recorded as well, right, afterwards.
Exactly. This will be available on YouTube. We will be sending the link to everybody. And thank you so much, Brian. You did an awesome job as the moderator of this entire session.
Thank you. It's easy with these guests.
And gracefully endured a 2-hour program.
That's right. Yeah, it was fun.
Thank you so much, Mate and Jonathan and Hernan. I think he was here with us until a couple of minutes ago. Thanks everybody from home that joined us. As I mentioned in the beginning, for those who join us in the middle, our annual conference this year, we are expanding to a 3-month program. This is the second discussion. This is the second event within our special program. Next week, we will be shifting to the future of fintech. With us, there will be Dave Velez from Nubank, Henrique Dubugras from Brex, Benjamin Glinson from Guia Bolso, and Sergio Furiot of Creditas. In fact, you guys talked a lot about the Creditas.
Yeah, a lot of our friends coming up next. I will be excited to attend that. That's great.
And then on July 9, our board member Daniela Jorge will be leading a discussion on the role of design on tech innovation. That's coming up on July 9. So thank you so much, guys. Success and stay safe. Actually, Jonathan and Matt, Brian is going to come over for a barbecue. You guys are invited.
Nice.
Obrigado, Margarita.
Obrigada. Thank you so much, everybody. See you next
Thank you.
Thank you.
Okay,
thanks,
bye-bye.
everyone. It's great to be here.
Bye-bye.
Ciao.